What's going on, guys? I hope you are having a good week. This is Shocks and this is ShocksCapital FX. Welcome back if you are a subscriber here, and if you are new here, guys, welcome. We talk about ICT, we talk about BTM, and we talk about institutional trading on this channel. So if this is something you are looking forward to learn, looking forward to explore, this is the channel. Click that subscribe button and join the team. So guys, today we are going to talk about a reversal, the secrets of reversal trading, what you need to see before you enter a reversal trade, what you need to do. Should you enter reversals? Should you catch, what do you call them, sniper entries, all that stuff? So today we're going to talk about that, but I'm going to show you the proper way of trading a reversal. The proper way of trading a reversal. So let's look at this chart, for example. So we have to establish a fact before we go any further, guys. For you to trade a reversal, the market should be or should have been trending in a certain direction for a specific period of time. So you can't be saying you are trading a reversal in a market that's been consolidating for days or consolidating for hours or something like that. You trade a reversal if the market has been trending for some time. So let's look at this chart. So this is the M5 chart, as you can see. So I just want to explain this in simple terms. So let's say this is the price action which is happening on on V25-1S. This is the price action happening on V25-1S, as you can see. So we can say from this day beginning, price has been going down, like that. So price has been trending down, as you can see. So guys, before I explain further these things, this V25S index, it's an index that's found on Deriv broker. There are simulated indices that we trade. So if you like them, guys, you can create your account using the link in the description down below so that you can benefit from the moves. There's no news, 24/7 trading, or that you know the benefits, guys. So let's go. We were saying the market should have been trending in a certain direction for a certain time. So let's say from this day beginning, price has been moving down. So this is essentially a trend, or price has been trending downwards. So how do you know when price is trending? It creates a what? It creates a channel of price. It creates a channel of price, either the bullish channel or the bearish channel. So from what you are seeing here, this is a bearish channel which price is creating as the day begins. But let's say in this area, let's just say hypothetically in this area we have a support zone or some support mechanism which we are using. We can be using order blocks, you can be using, what do you call them, voids, you can be using fair value gaps, you can be using whatever you are using. So let's just say there is something there, a support mechanism, a demand area. Let's just say demand area. Then price moves and gets into the demand area. As you know, guys, demand areas, support areas, order blocks, they break. So for you, if you are a conservative trader, you are not going to enter here like me. You are not going to enter here. So what are you going to wait for you to trade the reversal nicely? So a reversal on a time frame like M5 is more of a continuation on a time frame like M15, H1, H4. So a reversal on H4 is more like a continuation on D1, week 1 or monthly time frames. So this is what I'm just going to get across to you so that you understand. So what we are saying here is price gets to this support zone of ours, then breaks this channel. So as you can see from this day beginning where we have established our trend, price hasn't been breaking this channel. Price has not been breaking this channel. So when this channel actually breaks at this point, this is a sign that price has made a decision of some sort to go higher. Why? Because price hasn't been breaking any of these points prior to this movement. So this break is a confirmation of some sort of telling you that no, price has changed what? Has changed direction, and now we are in a bullish market scenario. So after this, after the break is the one you are waiting for, but you are not going to enter at the break or at the retest of this trend line. What do you call them? Breakout and retest. No, we are not going to be using that particular mechanism. We are going to wait for price to go deeper into what? Into our order blocks. You know, guys, we trade order blocks on this channel. If you don't know anything about order blocks, I mean anything, you can check out our videos on order blocks. Go to the playlist order blocks and you will learn all you need to know about order blocks, guys. Everything you need to know. So this is what we are saying is our order block, responsible for the break of the of the channel. So this mechanism also helps you to avoid fake reversals. What do I mean by that? You might be seeing this as a break of structure. Let's just mark it. You might be seeing this as a break of structure. Yes, it's a break of structure. Yes, then you would be marking this order block as your order block, and you would be buying here. What's wrong with that? Nothing. It's an order block. It's a break of structure, but there's something lacking. So that something is what I'm explaining here. A zone of what? Of support, break of the bricko. So this channel or this trend line which is broken is what we call a bricko. So you wait for the bricko to be what? To be broken. After the bricko is broken, you wait for what? For price to come to your order block responsible for that break of the bricko as seen in this picture. So this is what you are waiting for. This is what you are waiting for you to trade reversal, right? So after price comes back to retest this order block in this area, this would have been your, this is going to be your entry, and your stop loss is going below the order block. Why? Because it's confirmed. It has tested an area of support. That's confirmation number one. It has tested it has broken a bricko. That's number two, and it has tested an order block. That's number three. This is what you want to see, guys, for you to trade the reversal. So let's look at another example from, this is GBP JPY. So we're looking at this example on GBP JPY like this. So what we are seeing here on GJ is a price making this channel up. Then so this channel which price is making, this is H1, is what we call what? A trending market structure. So we said market should be trending. That's number one. That's what you need to see before you think of trading a reversal. So market is trending. What are you waiting for? You are waiting for break of the bricko. So most of the times when market is trending, it will form this bricko I'm talking about. So don't take my word for it. Just go back into your charts and try to see these things. Try to do homework. Try to back test. You will see what I'm talking about. When price is trending either downwards or upwards, it is making some sort of a bricko. So if you're a clean price action trader like me, you see these brickos and all. And if you are a market maker trader, you use the 50 EMA. You see how price reacts to that EMA as price moves in a certain direction. So that's what I'm saying. So I'm using the bricko. So when price breaks the bricko, that is a confirmation of change of trend. After that, you would then go back and identify this break of market structure and this break of market structure. And guys, I'm showing you this in hindsight, right? So, but if you want to see these things, if you want to see us trading, actually trading in foresight, you can join our Telegram group. The link is in the description below. You see we actually trade these methods and we actually send our charts. So that being said, price has broken this. Then after that, we are doing this. This is the order block we are marking, and we are marking also this order block. So we call this a source. So this is a price source where price is initiated, or this trend is initiated from. So this order block is what we are waiting for. Price comes, retests that OB and goes down. So you have caught a reversal. You don't have to catch the reversal up here. You can minimize your risk and catch it when it's confirmed and ride the rest of the trend. So you'd have caught here and all this money took all these pips. So let's look at this. This is the brico. You see this trend line here, this trend line. This is the brico of price, of what price is doing as price is going down. So price is respecting this brico, and price is moving what is moving down. And as price starts moving up, you can see we have some kind of a brico again. So this is how price moves. What you have to do is train your eyes to understand and to see these things as they happen in real time. So what we are doing here is we have just broken this brico. At this point, we've broken this brico. When this breaks, we now confirm this break of what? Of structure. We now confirm this break of structure. Because if this doesn't break, this is not a break of structure. Why? Because it's more of a stop hand. It's more of a stop rate. So now it's broken. We can confirm this. This is a break of structure and mark out our what? Our order blocks. This is our order block number 1. This is our order block number what? Number 2. So these are the order blocks which are we are expecting price to come back to and move up for our confirmed or for our new trend. Price came back and retested this order block, as you can see, and actually threw a confirmation pin, as you can see, and price started going up. So as price started going up like that, you can see again that we have some kind of a brico here where price is failing to what? It's failing to break this one. So this is the brico. You now know what to do if you identify a brico. So this is how you anticipate reversals. So let's say, for example, you don't trade reversals per se. Let's say you trade a continuation. Let's say you mark this order block. This is what you trade. Let's remove this. So you don't trade, you don't know these things. Let's just assume that. So you trade this order block. Price moves up. This is the aggressive move which we talk about in most of our videos. Then price comes back to what? To this yellow order block, which is our golden zone, which is our demand zone, our support area. So price comes back here. What are you going to do? You are going to try to see what happens in this area on your what? On your entry time frame. So when you go down to your entry time frame, that's where this reversal concept comes into play. That is where you need to know what to see before you validate a reversal. So this is what you have to see. You go down to your what? To your M5. This is your M5. As you can see here on your M5, price was moving down like this and retested your what? Your order block. Where is the brico? You can clearly see that price has been having a hard time breaking this as price was moving down this road. So price now breaks, and what are you marking? You are marking your what? Your order block. Price retests it and goes up. What happens if price misses your what? Your order block, the first order block here? So actually you don't die. Nothing happens. But what you have to do to catch one of these moves is you are waiting for these order blocks as which price creates as it moves up. So you are waiting for any of these to hold and join in on the what? On the trend. So this is not that bad, because this is what? This is M5. This is M5, guys. You are just waiting for price to come to your order block on M5 and you have a 5 pip or 3 pip stop loss. Imagine that. And you are going for 100 pips on H1. That is wonderful, guys. I would do that. Look, let's say this would have been your first entry. You have been missing trades here. This is your first entry. You have missed the reversals. Yes, it won't be pretty on your screenshots. Yes, but to make you money. So this is the what? This is the order block, and price moves up. Let's just measure how many pips is that. So this is actually over 100 pips. And how much are you risking? You're risking only 10 pips. So that's a 1 in 10 risk reward ratio trade, which you would have caught with this simple reversal validating strategies. You see? So guys, break of structure, you miss this, yeah, no problem. You're not going to die. You come back, this is the order block retested. Let's say you miss that too. You get this one. Your stop loss is not going up here. Price has moved. Price is not coming back here if you are correct. If you are correct in your analysis and everything, price is not coming back to where it has moved from. So what you are doing is you are using this order block to enter your trade, and you are having a 5 pip to 10 pip stop loss, and you are targeting this much. So your risk reward ratio on these types of trades is going to be what? It's going to be minimum 110, minimum 15. Why? Because you are catching a reversal. Prices just changed directions. So it's going to move for what? It's going to move for bigger ranges because just 10. So it's going to move for bigger ranges. So this is what you are just waiting to get. Let's look at this example again. Let's look at this example. You see price has been respecting this break wall. Do you see that? So let's say up here you are having your resistance area. So this is your resistance area from where? From your higher time frame. This is M5. So this resistance can be from H1, H4, D1, week 1, or even monthly. So what you are doing on M5 is you're just waiting for a break of what? Break of the break wall to confirm your what? To confirm everything that you are seeing. So after it breaks, you wait for retest of an order block, and after that you are gone. So this would have been your order block that's tested. So if you had entered this one, yeah, you would have been stopped out at break even, and you would have entered this one, and you would have got how many? Or you could have been stopped on the what? On the break even too. So this is the importance of using the higher time frame for your what? For your demand and supply zones. So without the demand and supply zones from what? From the higher time frames, you are going to have a very hard time getting these concepts, guys. These concepts are going to be very hard for you. So this is it, guys. I hope you got something from this video. If you like it, leave a like. Leave a like. Turn on your post notifications. Share the video with other traders. Thank you, guys. It's been a pleasure.